If you're looking to do more deals, you have to be creative in your approach. Today, we sit down with Caleb Christopher to learn how he approaches his deals using creative structures. The most important thing that he talks about is making sure you don't focus on yourself, but instead focus on the seller. So, if you're looking to do more creative deals and grow your portfolio, make sure you check out today's conversation right here on Multifamily Insights. Caleb Christopher is one of the foremost minds in creative financing for residential real estate in the United States. Now, he's been featured in Pace Morby's Bigger Pockets book, Wealth Without Cash. Caleb got paid to buy his first creative deal and has been an agent of change in the world of creative finance real estate, raising the bar for safe, legal, and ethical transactions. Let's welcome to the show, Caleb Christopher.
Thank you. I forgot about some of that stuff. It's been a while.
It's fun, right? Isn't it fun? Sometimes you hear people read some stuff in your bio and you're like, wait, I did do that. That's
Yeah.
cool. Well,
Yeah.
Caleb, our listeners, they heard me, read a couple lines of your bio, but why don't you take a minute or two and give us a little bit more context on your background?
I am somebody who is very technical minded. I'm a very technician type of person, and I tend to build what's not there for me. So when I get into something, I'm like, all right, oh, this could be better. Oh, this could be better. Is anybody doing this? Please, somebody help me. Anyone. And it's not there. And I'm like, all right, I guess I got to build it. So I did that with an underwriting calculator. I built that and published that. I did it with my first company, Creative TC. Was I'm doing creative finance deals, the subject to, the seller finance, the contract for deed, wrap mortgages. There's a lot of complexity there and not a single authority that you can go to. And I'm like, I will become the authority then and help people do these safe, legal, and ethical. And that's been really important to me. And so as I went on that journey, I also discovered the joy of entrepreneurship where I actually get to help other families put food on the table. And I see people grow in their careers and things like that. And so that's what I'm about right now is, I don't want to make this about what I'm doing, but I'm starting another company. And it is my pleasure to do that because it gives my staff an upward mobility, career mobility. They've done a great job. And so that's the joy for me is to continue building and less doing, more building and let them do because I'm creating opportunities for them. So that's where my heart's at right now.
I love it, man. You talked about really building things that you want that don't exist, which as an entrepreneur is amazing, right? Because how often do we run into a challenge or an issue and you end up having to do things a very difficult way and you wish there was something better? And to have that mindset and the ability to just go out there and create it so the next person doesn't have the same issue, that's a great tool to have in your tool belt there. You talked about creative financing, and I think that's something that really has always been intriguing. And if I could go back, for many multifamily investors, especially if you start investing in the last 5 years, a lot of the unique strategies that you would hear people talk about to find deals, they sound good, but they didn't work. I mean, the reality is most owners knew they could get the best offer by just going to listing with a broker. I mean, they were getting, inquiries every day, if not every other day, from somebody trying to buy their property. So there wasn't this imbalance of like a challenge that that owner had and not enough people looking to buy it. That has shifted a lot. And I'm specifically talking to multifamily. I think in residential, there's always, a challenge and opportunity to buy it creatively. But in multifamily, I'm seeing that has shifted. More and more owners are open to seller financing and creative deal structure. So it's timely for us to be talking to you because you spent a lot of your time in your career building up your portfolio, doing creative deals. Can you talk to us about, I guess, the psyche first and foremost of what does it take to do a creative deal, both from I mean, we know from a buyer standpoint, we want to get it done, but for that seller and for the buyer, like what needs to be true in order for a creative deal to happen?
You start with the end in mind. You know what's going to happen, but you have no idea how it's going to happen. Does that make sense?
It does.
That's the mindset you need. You have to agree, buyer and seller, hey, here's what's going to happen. Here's what we're going to accomplish together. I'm going to buy it on creative terms. I'm either going to bring some cash or no cash, or there's so many different arrangements. And so that you're getting into the how already, as I already started talking, but it's like, I'm going to buy this property. You're going to get this much cash. And we're going to find a way to do it. But I'm not using traditional bank financing. because your price is too high. That's almost always the discussion. Is if it's usually about the price is too high, the seller has specific needs or something like that. And so it is a it's a process of discovery. What's the seller's story? Because if you want a cash offer, you don't need a story. You agree on the numbers. You don't even have to know each other, nothing like that. But creative finance, you're getting involved with somebody, and you need to know the backstory. How and why are they there? What are the reasons they're asking for that price? Maybe they've got pressure or a deadline coming up, and they can't take less. And so once you understand the story, you can figure out the how and the specific things that matter. But I train my team. We need to be outcomes oriented, not task oriented. Yes, we have tasks, task lists, templates for different deals. However, they're going to change. And I expect you to change the list as you go, because it doesn't matter how many check boxes you got done if the customer didn't get the result. And I run a consulting team. We do creative finance deals. So that's the mindset that we coach people on as they come on board with us to get the stuff done.
You talk about being outcomes oriented, not task oriented. What does that look like in practicality?
Very similar. Here's just another angle on what I said before, I think, is it's the ability to zoom out and look at the situation from a bird's eye view to make sure you understand where you're going. There's 10 different paths to get up a mountain, right? But we're still going to get to the peak. So knowing your breakpoints, like this is a definite no-go for me, but aiming for, we're going to buy this property. We're going to take over management. We're going to get the cash flow from this property. The more abstract you can get, the healthier you will be when it comes to being outcomes oriented. Because do I have to own something to make money on it? No. And so being a little more open minded on the how you accomplish the goal is, why are you buying a property? To build cash flow or to build equity or both? But whichever is more important, if you can trade off some things to at least get some of what you want, you can get the rest later.
And Caleb, the reason I asked the question is I think so many people are trained to buy and invest in real estate, you know, get value, figure out what you can pay for a property where you still have enough upside. And we fixate on a number, right? The purchase price. And we
Yeah.
get into this stalemate with sellers because they want a number that's higher than our number. And we end up not being able to progress past that. And what you're getting at is focusing on the outcome where it's, yes, you want to buy the property. We know that. But you're saying we have to understand what the pain points are for the seller, what the challenges are, what's their story, why do they need a certain number, so we can maybe craft a deal that fits their needs. I remember when I was really early in my investing journey, I was at this, it was a RIA event,
Mhm.
and there was a guy speaking and, great presentation. I don't remember his name, unfortunately, but I remember he said something that I never forgot. And he said, when it comes to negotiations, there's price and there's terms. He says he lets the seller pick which one they want and he gets the other one.
Mhm.
And that gets to the notion of what you're getting at because, $1 million may be an asinine number for many investors, but there are probably scenarios where you could create where you could pay $1 million and have it work if you had 10 years, 0% down, no payments. Like there are things you could do where you can be creative and structure that deal. And it takes a different mindset to approach it that way. For the sellers you run into, are they typically in a distress situation or like what's their motivation? And again, I know I'm speaking in generalities here, but when you come across these owners, what makes them open to creative deal structures?
Usually, by the time something gets to me, because again, I run a consulting firm, I do some of my own deals, but most of the stuff lands on my doorstep because it's somebody else's deal. When it's single family, it's usually financial distress. That's where the creative finance deals come from. It's usually not about price unless it's $1 million plus property. Then it's about price and what the seller wants more than what they need. And so they're willing to hold out. They're not in enough pain to move off at a lower price. So these larger deals, whether it's single family or you get into the multifamily, sellers at the higher dollar amounts are typically more willing they're more sophisticated. They understand numbers better. So they're more willing to talk through different scenarios other than a cash price. That doesn't mean you skip the cash price or bring your own financing price or whatever you want. You should still do that because that's the simplest form of the deal. But if they've got your number or they've got their number and you've got your number and they're just not going to match, now you've got the open door to have that conversation. If you want your price, I get my terms, right? We can still make this happen. But you also need a more flexibility in your mind when it comes to, okay, we can do this deal, but it doesn't cash flow after like, even if I get great terms up front, it's still not a great deal 7 years from now. Yeah, but can you make an exit? Because there's different strategies, especially with multifamily property. You don't have to hold it for 10 or 15 or 30 years. Sometimes you take over, get low payments up front, stabilize the asset, and sell it off to somebody else, and you make your profit there. And there's no cash flow for you, but there is a willing buyer if you get it to the certain standard of quality and tenancy, et cetera. So there's different business models within the multifamily space.
Yeah, I love that, right? Because you're talking about solving the problems that the seller has. And again, on the single family residential side, typically it's going to be a cash situation, right? They just need to liquidate, they need the money. But the
They're
higher
facing
price points,
foreclosure. Yeah,
facing foreclosure, maybe it's a property they inherited, but it's not worth what they think it's worth. And, you kind of run into those situations with multifamily, commercial, larger or more expensive home values. Now you're getting into some other factors. And we know for a fact, right now, there are a lot of investors who maybe use bridge financing. So they have, loans that have come due, they're paying for rate caps, they're kicking the can down the road. Maybe it's a partnership that is dissolving. We're just seeing a lot more
right.
disruption, turmoil, if you will, in the marketplace. And as investors, this creates opportunities. And I remember there was a deal that came my way about a year ago. And it was a deal where the number they wanted just did not make sense, like at all, like nothing feasible. And fast forward a year, they ended up losing the property to the bank. A new investor that I know as well acquired that property. And I look at deals like that and I ask myself, man, could we have done something different with the offer, with the approach to salvage that deal? And maybe the answer is no. But from your standpoint, when you get deals like that, particularly, and I know you've mostly focused on residential, but I think in the commercial space, it's always a little tricky because I feel like these, investors just, it's not their personal residence, right? I just feel like they they tend to lock in on their numbers a little bit more. But when you look at those kind of deals or those kind of opportunities, how do you evaluate like which play in the playbook to pull out to see if you can get some traction with that owner?
Can I make their number work profitably for me is the question that I ask. Then I look at the different strategies. Is it a long-term hold? Is it a stabilize and flip and sell out? Is it a rehab? I mean, at the high level categories, which one of these categories does work? Ideally, two of them work. And by work, I mean don't lose money. One of them is profitable. I have a fallback just in case, and then all the others may or may not work. Um, Shoot, man, it's that deal maker mindset. Can you make a deal out of something? Those are the people who can scale a portfolio because you can drop something in their lap and they could say, well, as it is, it's not a deal, but I could make it a deal if I could change A, B, or C, or any combination thereof. If you'll let me modify what I can do, how long I have to pay it, the interest rate, the payments, anything like that, profit shares, who knows? Let's talk terms and see what we can do to turn this into a deal. That's the person who can scale faster because they've got that flexibility. But that's kind of a maverick mindset. And so the maverick mindset doesn't always have cash either. And I wanted to bring up capital raising as one of the ways to get stuff done. And you can use a seller to raise capital or you can use other people. But we can get to that at a different point if you want.
Yeah, I definitely get into the raising capital side because I think that's a huge component and obviously another huge barrier to doing more deals. But one of the things I'll say is, we've talked about creative financing without naming the strategies. And I actually really like
Sure.
that because I think oftentimes we get too tied up in like the title. Okay, this is a subject to, or this is a land contract, or this is a master lease agreement. And if you don't know what those things are, it's easy to freeze because I was like, okay, well, what's a master lease? And I got to go Google that and look it up. And what you're getting at is, yes, there's terms because other people have done this. So
Right.
there's names for these strategies, but that's not what you should be focusing on. Focus on solving the challenge in front of you. Figure out how do you structure the deal so that it works for you. And if you have two strategies that work, you've got something you can go and execute. Can you talk more about that? Because I do feel like people tend to go learn a specific strategy and then they look for that, right? They learn apartment syndication or they learn, master lease agreements, and that's all they look for. They don't see how they could use other tools in a tool belt to get a deal done.
Uh, credit to the people who master a strategy. That's also a valid thing because that maverick mindset of being able to just think through all the different stuff is not for everybody, and you can't force a square peg into a round hole. So everybody has their place, but I think those people need to do a better job of marketing themselves as this is my buy. I have a clear buy box. This is the type of deal I do. If you have a deal that works like this is how I do business. That's where those people can improve. I wouldn't necessarily say that they need to change how they think, just how they market themselves. Now, if you do want to expand your horizons, absolutely. But it goes back to focusing on what you want to happen, and we can tell you how to make it happen, right? It start with the end in mind and work backwards, and then leave blanks as you go. My kid was doing an assignment. He's 12 years old. He's doing a science experiment, and he's supposed to write out the entire procedure. I said, start with the end, son, and work backwards. Go up the page. And he's like, well, I don't know about X. Then put a blank and hire somebody to help you figure it out. Well, I didn't tell him to hire somebody, but I mixed my stories. But I told him put a blank and we'll look at it later. I'm the person that's going to help him figure it out.
Yeah,
But
yeah,
I'll ask leading questions so that he fills it in. But it's
yeah,
the same thing. Start with the end in mind, work backwards, leave some blanks, and then say, does this capture the main idea of what we're trying to do? You're really working with somebody at that point. You're
yeah.
past the cash offer. You're like, how can we do something together? This is what I want to happen. This is what you want to happen. It's basically you work it into a letter of intent. It's hard with a broker in the middle too. I'll say that.
Yeah, that's what I'm saying. Is like, and I think that's one of the challenges is that, when you have a broker, especially in commercial, right? Then it's hard because brokers are concerned about them getting paid. And again, I think even brokers now have warmed up because they realize, hey, these
This
transactions aren't happening quite as
this is
much
how
as they
you get paid,
were.
Huddy.
This is how we get paid. Maybe I can do a finder's fee or something like that. But
Yep.
there's it's definitely an interesting time to see how some of this is coming together. We were talking about raising capital as kind of another tool that you have at your disposal. We certainly raise capital for our deals, and I know you've got a couple of things going on. You've got the title company
Mhm.
raising capital for deals. Talk to us more about how you see raising capital play out in your business.
There's I think people need to be aware of SEC regulations. Is the audience here generally familiar with that?
For the most part.
Okay.
But please, I mean, for someone who is not, let's just set the stage for them all.
So I can't just go out and ask random people to throw money at my company, especially as a passive investment. And I'll keep it high level, but basically like that. If I can't just request money from random people and advertise that I'm going to give a return or anything like that. That's regulated by the Securities and Exchange Commission, and a bunch of state. So state and federal. And so you have to register security, blah, blah, blah. Anyway, now I can ask my mom and my cousin and anybody I'm already in business with and say, hey, I'm starting a business or I'm going to buy a multifamily property. Would you want to join and work together on this? And I can solicit funds from them willy nilly, basically. But to be able to solicit funds from people, you have to be searching for accredited investors, which is a whole category, basically people with $1 million in net worth, not including their primary residence, and a few other categories of ways to find that. But you got to make sure that you're with the right people. Otherwise, fines, potential imprisonment, etc. So you got to be careful who you raise capital from and how. And that usually involves an expensive SEC attorney to help you build a fund and all this other stuff. And so it's kind of an insurmountable first step for people unless they have enough capital from friends and family that they already know to do the deal. Did I capture your understanding as well?
Yeah, absolutely right. And there's two ways to do it. To go just a slight hair deeper than this, right? You got your your friends and family, which many people call the 506B approach, B as in boy, and then your pure accredited investors, that's your 506C, C as in Charlie. And those are really the two main ways people use to raise funds. And there's definitely a lot of regulation around it. So if you are
But
going to
that's still
raise
putting
money,
together a fund.
that's still putting it together. There's JVs and other,
Mhm.
simpler things that you can do, but that's still, having legal documentation to go out there and raise and solicit funds. In your deals and with your title company, how are you structuring that?
So there's a platform called Fractional. You guys will have my contact info. Reach out. I've got a referral link. But a Fractional is what they do is they create investment clubs. Now I've seen people do this with their own attorney. You can create an investment club that pools funds and then chooses to invest in a deal, namely yours. But they have material participation. That's the other part. Is I can partner up with anybody who wants to contribute funds if they actually also work in the business in a material fashion. They have realistic impact in the day to day or operation and management of the business. It can't be a passive vehicle. And that's part of one of those tests for uh, whether or not you're violating SEC. The fractional platform creates investment clubs. So it lets me run webinars, Zooms, et cetera, saying, here's a project I would like to start, a business I'd like to start, such as a title company in Colorado. We're running a club for anybody who wants to invest in a title company, and then we'll look at the business plan and say, is this the one we invest in? Fairly straightforward. Yeah, we're probably going to vote for my title company, but we could vote for a different one. But it does allow non-accredited investors to join a club where they contribute their own funds as little as $10,000 and pool that money toward a bigger investment. And so they can co-own assets. And if you're the one doing deals, now I'm talking to people who've done deals before, not first timers. Please don't mess with people's money like that. You need to be a partner on a deal a couple of times, uh, or use bank money or something like that before you go soliciting, because you're going to get yourself and other people in trouble in a world of heartache if you haven't got proven past performance. But you can raise funds with a platform like that. If you've got the relationships and you want to do that, you can also just create an investment club LLC through an attorney and have the funds contributed there, and then make sure you have monthly meetings, you review P&Ls, they make management decisions. Like, that group needs to be the manager of the operation, but that's a very valid way to raise funds without having to rely on accredited investors.
And the thing that's interesting to me is like there's an education component, right? Creating this investment club, but you also have the opportunity to raise capital for your deals.
Mhm.
How does that compare to just whether it be creating a fund or kind of a syndicate, a one-off syndication without the investment club?
I think they're nearly identical. To me, in my world of creative finance thinking, it's like, okay, we've achieved technical compliance. They can't shake a stick at us. Now let's go do the same thing we wanted to do anyway. It is. Now, you can raise funds when you have a project in mind, which is a bit more fast paced, or you can say, this is my business model. I buy multifamily properties. They cost me four or five, $600,000 up front. So I need to raise at least $600,000 of capital. And we're going to raise the capital into a club, and then we'll go look for a deal. That's the preferred method, is fund a club or build a fund or whatever, if you want to register it. And then you go look for the deal.
Yeah, I mean, listen, it's just something, another tool in the tool belt, right? We talk about
Yep.
this, but there's another strategy that investors can utilize, whether you're looking at residential properties, commercial properties. There are lots of ways to go out there and structure deals. And the big takeaway for me is just don't just do what you've always done. Step back, process, analyze other ways of doing it, and focus on the outcomes as you've kind of alluded to. And for most of us who are looking to raise capital for deals, well, the end that we want is for someone to invest with us. Now,
Hmm.
how we get there, to your point, that's negotiable. Like that's flexible. We're not as fixated or tied to the exact mechanism. It could be a JV, it could
Hmm.
be a traditional syndication, 506B or 506C. It could be a fund, it could be an investment club. I think ultimately you have to ask questions and figure out what are people looking for? where, can you get them involved? What questions do they have and what works for them? And that approach and that mindset, again, it just forces you to be a bit more creative as opposed to just going out in the marketplace with this offering or this structure just because that's how you've always done it. And I think that works so well on the deal side as well as your overall structure from a real, from an equity and a capital standpoint as well.
Yep. I mean, I know one guy who raised, I think, 1.2 million, and he was buying small multifamily, and he was going to buy not cash. He was going to either get bank financing or take over loans subject to. And so he built his investment club and said, we're going to buy at least 8 properties, but as many as we can with the available capital. And so they funded it once on the front end, and everybody's a co-owner of all these properties and has cash flow distributions equal to their percentage, et cetera. But his job is to go find the opportunities. So they fund it. He finds opportunities. He brings it and presents. Here's the 3 we're looking at. Do we want to buy 1, 2, 3, or none? And they vote. He's like, here's the pro forma. And it turns into a real club where there's active material participation, almost like a little mini mentorship, but everybody's got skin in the game and everybody votes on which deals do we move forward with.
And I love it. It's just another way of approaching the business.
Yep.
And this is something that, again, you can add to your tool belt if it's something you're interested in as well. Caleb, when you sit down with your investors, you got your TC Creative as well. So you do a lot of the consulting
Yep.
with investors. What's one of the biggest challenges that investors face, particularly when they're trying to do a creative finance deal or creative, let's just say creative structure at all?
I would say consistently that the investors buying these deals are coming in thinking about themselves and not the seller, which can also kill their deal. They haven't thought about the story on the other side. And that's one of the things that I do is to bridge that, break down that wall, bridge that gap, whatever you want to say. But like, hey, what's the seller doing after this? Again, I mostly deal with single family in my day to day. And so it's getting that seller's story to make sure that you're not painting them into a corner with the way you're buying the house. And so making sure that your long term plans also align with their short, mid, and long term plans. Because if you don't factor that in, 6 months later, it could still come back and assassinate your deal because I have to have this thing and I can't because you have my loan and blah blah blah. And the same can be true when we're doing like I help somebody take over an SBA loan with like fractional ownership of the seller's LLC taking over, and the SBA had this assumption program, but it required the seller to still stay on as a personal guarantor. And it was this whole crazy thing. And they had to requalify everybody. And I'm like, that's not going to work. We can just do it, right? We don't have to step through their hoops. We can just go do it and minimize complexity here. But we had to understand, what are you doing, seller, after this? Because you still have a personal guarantee on this loan. How do we offset that risk for you? Do we buy a key man policy for the buyer? It's like thinking through the seller's side of things and showing that you're thinking through things for their benefit is a real act of good faith and builds a lot of good rapport. Hey, I'm going to get key man insurance on me. And it's where the policy is going to indicate that we're paying off the mortgage or whatever first to make sure that you're released from your obligation here. We're going to have a reversion of management clause in here so that if I fall off a cliff or something and don't manage, then you can take over management of the asset because you've already proven that you can manage the asset. Not That's not true for all sellers, by the way. So, but it's these little tools and pieces that really show the seller you're in it to win, not alone, but through working together.
I imagine from a seller's perspective, there's a lot of apprehension where, to your point, the natural thing for most people is they just want a clean deal, right? They want a clean
Yep.
offer. They want, new debt coming on. By the time we get to the closing table, they're done. They're 100% done. And most creative deals require that owner to still have some level of equity, exposure, whatever word you want to use. So there's probably a little bit more apprehension. You talked about understanding their story and really talking through them to build that rapport. Can you talk more about some of the challenges that those sellers have and how you kind of get them on board with the idea of a creative structure?
Yeah. I mean, the number one problem that they have, which is legitimate, is my credit or my personal guarantee is still tied to a loan that now you're responsible. I don't even own the property. You own the property as the buyer, and you're supposed to make my payments. But if you don't make my payments, and I don't have the income from the property, I can't make the payments, and my credit's tied to that, and I've got a personal guarantee on it. That's a big thing to overcome. That's the number one thing, and we have to talk through that. So they have to want their price so bad that it's worth doing that, or have to put a short enough timer on it that it's worth doing it. There's a bunch of different levers you can pull to shift the terms to offset some of that risk, but it's understanding that risk. That's the biggest thing. Is they also want to go do their next deal. So does your offer accommodate their next deal?
Yes, that's great insight right there. Because again, it comes back to what you said earlier is you've got to understand the story that the seller has and understand the levers they need in order to be open to the structure. And I just don't know that if that happens enough, particularly when there's a broker involved, because now you're
Yeah,
playing middleman because you're trying to, you're getting, filtered information from the
yeah.
broker, and it's really hard to understand what the real trigger is, what the real driver is, what the real motivator is, and how you can structure a deal creatively. And quite frankly, most brokers don't want creative deals because it's confusing to them. It means they may not get a check at closing, which they don't like. And that's not fun. So if you're talking directly to the owner, that's where some of these conversations can uncover the insights you need to explore creative structure.
Hmm.
But when you have a broker involved, that changes. I did an interview with someone else maybe a couple months ago, and we talked about how he comes across his deals. And he says he just has built a deep investor relationship, and it's just a pool of all the investors in his market. He sits down with them, goes to coffee, just gets to know them. And it's more organic in how those deals come into his field. What about you? Like, what's the lead strategy for the deals that you use?
Uh, this is one of them. Showing my face and my name, getting known, because I'm pretty niche. I I I have that maverick mindset of how can we make the deal work, but people bring stuff to me because they heard that I do weird stuff, and it's that marketing arm. We have to get better at letting other people know what we do, so that they're like, oh yeah, that really handsome guy from Kansas. What was his name? I got to call Caleb because we got a creative deal on the line. That's literally it, is just that word of mouth and people remembering Creative Finance Caleb.
I love it. Caleb, what's the best way for listeners to get in touch with you?
CalebChristopher.io. I've got a newsletter there where I share my actual business. I own 3 or 4 businesses. We'll call it 3. But I share the business financials there. I share my rental portfolio numbers, profits and losses, good times and bad. There's no guru crap. I'm tired of that. And so I'm like, somebody just show me the real numbers. And so I've got my title company, my consulting company, insurance, et cetera. It's all there.
I love it. CalebChristopher.io. We'll link to that in the show notes. Caleb, right now we're going to transition and go to our round of insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide, go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. Give me a failure or an apparent failure that set you up for later success.
That's a good one. How long do I have?
We'll let it.
My company almost went bankrupt at one point. Okay, so absolutely a failure. We mismanaged cash. We hired ahead of volume. There was a market shift, and we were overextended. So there's $140,000 out the window, and I had to borrow money to survive. Really harrowing times. On the other side of that, it helped me evaluate partnerships. JVs, etc. And so I built a partnership evaluator because after coming through, not just like sucking up the failure and canceling and closing out the business, filing bankruptcy or whatever, because like I said, I came to love entrepreneurship and providing for other families and building the opportunity. So I have a duty to my people. It was the coming through, the figuring out how do we get through this tough time. And I realized I don't really want to partner with somebody who hasn't been through a challenge. You have to have a story where you almost lost it or you made a big screw up and you fixed it and you got through. That's who I want to partner with, because otherwise you're just a business virgin that's never been through the fire.
Love it, man. Give me a digital or mobile resource you recommend for our listeners.
How about I give you the partnership evaluator that I built? It's a great questionnaire sheet. Like I write one about you, you write one about me, and then we get together and have coffee and have an honest discussion, because I've seen so many partnerships where both people agree that the business idea or the investment is a good idea, but they don't know who's on the other side of the table, really. They just agree that this is a good idea and let's do it together. So I'll provide that to you.
Sounds great. Give me the book you've recommended or gifted the most in the last year.
Made to Stick by Chip and Dan Heath. Do you know that one?
I do. I've not read that one, but I've had it referred multiple times, so I got to put that on the list for sure.
Yeah.
All right. Give me a daily habit that helps you stay focused on your goals.
I have my checklist next to me while I read the Bible in the morning. And that way I can focus on reading the Bible. And when I get distracted with oh, I got to do that today, just write it down, get it out of your head and get back to focus. And then I have my to-do list, and then I send a morning brief to my chief of staff. Not every single day, but I send a morning brief. Hey, here's the key things we got to get done today. This is you, this is you, this is John, this is Susie.
Love it. All right. Give me your number one insight for structuring creative deals.
Get the story. Let's start with cash before you go creative, and then get the story so that you can figure out the creative.
All right. And you're in Kansas, so give us your favorite place to grab a bite to eat.
Joe's KC. Used to be called Oklahoma Joe's, but it's the best barbecue in the country.
All right, Joe's KC it is. Lots of great stuff, Caleb. I mean, you talked about just your background, solving problems, creating that thing that you wish was there, and just being more of a maverick mindset, focusing on the outcomes that you're looking for. And I think as investors, it's easy to analyze deals. Oh, it doesn't work. Let's move on. Or let's throw out this offer. Oh, they didn't take it. Let's move on. But you're really getting at the outcomes and really understanding the story of the seller more. And I think that can help so many of our listeners just really think about how to structure deals or how to approach deals so that we can see more deals that fit our criteria and ultimately get more solutions and outcomes that we're looking for. Again, for folks that want to learn more, check out Caleb and his website. Go to calebchristopher.io. We will link to that in the show notes. Thanks again for being a great guest and coming to the show today. We look forward to staying in touch with you, and we hope you have a great one.